Well, today is Wednesday, February 22nd, 2012. All charts are weekly charts for the metals, and each one of them contains the price at approximately 11 a.m. Eastern Time today. Each contain a common theme within a test of a 61.8% Fibonacci retracement mark, which is basically try to make the selling a failed move. And another update within the changes within March. I'm still unsure within this channel what's going to transpire, but given how I'm still happy with YouTube on many levels, it seems that if I'm not happy with the service within any front, then I'll go elsewhere. And currently I'm not happy within the speed of their web page and everything. It's right now it's a good web page. Again, if they do something against the people, quite frankly, well, that would make me not happy. Let's move on to these markets. We're going to look at silver, gold, palladium, platinum, and copper. And each one has that same theme where it had a rally within the earlier part of the chart sometime last year. It's sold off, and now what it's doing is it's finding a 61.8% retracement test within a significant low and a significant high. The silver market, which I've been covering for quite some time, it's been consolidating within this mark here, which is 33.58 for quite some time. And within this mark, this doesn't tell us that the selling is a failed move if we get above it, because it's really got to get above 39 within the Fibonacci levels from this high and this low. And I've talked about this, and it's on other charts, but it's pretty much around 39. However, what it does mean when you have a low here and a high here, and you break above this level, is that the market is once again in a bullish scenario. A lot of times when these levels break out or break down, it could be quite significant, where you may see some movements where you have like two candles to go up to 39, or two candles back down to 26, or therefore you'd have greater volatility from where we currently stand now, and it is tiny at the smallest level. Let's move this on now to gold. Now, it's significant Fibonacci. It uses a little bit of a different one, because for silver, I'm using like the lows down here and the highs up here, which here I'm not. I'm using the highs here, lows here. So for the selling that occurred at the end of 2011, that's seen the price of gold go from 1,900 and change down to about 1,500. For that to be a failed move or a normal correction within a way the charts move, it needs to confirm that's going to break above this level. Right now you can see the levels on the left-hand side of the screen, 1758. Right now it's at 1756. So it's basically testing this level. It has been doing so for the last month or so, sort of like silver, and really many of the different metals doing the same thing. Breaking above this line, and even in here, well, then the next test is up towards the previous high. Breaking above that, well, then when you make a pattern of higher highs and higher lows, well, a higher high above 2,000, basically. Next up, let's go to palladium. Palladium, a white metal. And the Fibonacci levels will be from this low and towards, no it won't, it'll be from this high and this low. So therefore, within palladium, again, we're testing this significant level. 4 different candles or time frames where it's been going through it. The Fibonacci level is 720 and a quarter. We're pretty much right on it. As you can see, the price is at 719. Let's move this on to platinum, the final white metal. And platinum's having a spectacular day today. It's doing really, really well, where silver and gold pretty much going sideways, consolidating within its previous gains. Platinum broke out today, or so far it has been breaking out. A lot of times when you see these levels, and this is the same with all the other charts, that when it does break out, then now what you want to see is rather than having resistance at this level, you are looking to find support and then build a base and then start to basically develop a pattern, of course, of higher highs, higher lows. The Fibonacci level is at 1676, and currently the price of platinum is at 1721. When you can confirm that you're above this level, above the 61.8% level for a decent amount of time, the next expected area for the market to go is its previous highs. Final chart will be copper, and copper's trying to find support at this Fibonacci level, which works within the lows of 272 and the highs, of course, up towards here. So this one's like silver again because I'm using the lows from here to here. And currently it's trying to basically to become bullish once again. Now I suppose if we do the Fibonacci from this, I'll just get a calculator here and try to figure this out. Well, the high is 465, so we'll do 465, which is the high, and we'll divide it by the low, and it looks like 3 spots, so we'll just say 3. So we'll divide it by 3. We'll put this to the power of the 61.8% retracement, and multiply the 3 again, so that gives us a Fibonacci mark of about 393. Which basically is right in here. So a double test of 61.8% Fibonacci. The first one, of course, from this low to this high, and then again from this low and the same high. When this one does the same thing and it breaks, it's all the same, that it breaks above it. You want to try to find support at the area, build a base, yada, yada, yada. But the significant thing are the two popular scenarios that take place. You either get the big breakout or the big breakdown. And these metals or the commodities are all doing this together. So because it's being done together, it's really not that big of a surprise. And quite frankly, when these get going collectively, then we'll be back like we were back in here, just talking about bull markets and possible different levels where resistance may be found and try to find support. Thank you for tuning in. Take care.